Now, in the video, I'm going to be talking about, again, that divergence I keep talking about on the Oscillator. If we can rally to a new high on the S&P, which I think we're going to, I think it will complete a divergence on the Oscillator, and then we'll see a reversal from that divergence. I've talked about this at great length and detail. I've been predicting a rally to new all-time highs. I continue to say I don't think it's done, with the possibility of a divergence on the Oscillator. Here we have this divergence going on, multiple point divergence with the MACD here. Again, we could go back up and still flirt with this trend line, still even move to a new high, slam back up into this trend line, or even overthrow it. But again, it is likely coming to a conclusion. We're seeing total complacency. The bears have thrown in the towel. Been calling for all-time highs. Anticipating the trend line being tagged here. It was just over 2 weeks ago, and for the NASDAQ to reach the 20,400 area, the bears have thrown in the towel. They no longer believe it's going to happen, and they've given up. Now, I believe it's going to happen. I just have the patience to wait for the topping process to complete. Bulls are totally complacent right now. They are oblivious. They don't think anything is going to happen. They think nothing's going to happen, no risk here. These divergences are likely about to play out in the weekly time frame. The bears are complacent, the bulls are complacent, and that's why we're likely about to see a rug pull very, very soon. I'm watching those divergences. Watch the video all the way through, and you'll see what I'm talking about with those divergences on the Oscillator. Again, I think we get another reference point of a divergence on the RSI. I think the S&P will probably push up maybe into this trend line right here if we don't reach the upper boundary of the rising wedge. But again, my target level is 5750 to 6,000. Again, I think we could see something that looks very similar to this, which is what I think is going on here. Please support the channel with the link directly below that allows me to be able to provide you this information. If you follow the link, it'll take you to a secured site. You can donate any amount you want. I ask that you just partner with me because I don't have any sponsors, but I need to hear from you in order to make it work. So please consider helping out today. I would really, really appreciate that. Quickly, the VIX, again, holding above the 50, the 50 holding above the 200. Again, we'll be watching. Here we are above 18 still. There's still risk of, again, volatility returning. We still may form the divergences on the oscillators first. I'll be watching to see what happens here. Do we firm up with the MACD, or does it go negative? And we buy a little bit more time. We'll see what happens. We drop below the 50 towards the 200 in the lower band here, or not. Again, I continue to say I believe that those divergences on the oscillator are likely going to form. I think the S&P will see things turn back to bullish with regards to momentum. Again, I'm predicting all-time highs, new all-time highs. I still don't think it's done. If you don't hear that, you're not listening to a word I'm saying. I think the market's going to top soon. Yes. Do I think we're going to move into a bear market? Yes. But I have been predicting new all-time highs, so NASDAQ can fill the gap. We're there. Now the topping process is underway. I don't think it's done yet with the S&P. Still think we make another new all-time high unless we get a successful backtest of the rising wedge. Again, we are in the heart of earnings season. We've got the jobs report later in the week. On Friday, we got the Fed meeting. Next week, we have the election. Next Tuesday, so a lot of stuff, a lot of earnings. Tomorrow morning, we have PayPal, we have McDonald's, we have Pfizer, JetBlue. I think after hours is going to be very, very important because we have Alphabet, and then we have Snap and AMD. These could be big movers for the NASDAQ. We saw a sell-off previously with ASML with the semiconductors, and then we saw a positive report with Taiwan Semiconductor. But we're going to continue to monitor how that impacts NVIDIA and the semiconductor ETF. We have AMD tomorrow. After the bell, things to pay attention to. Again, Eli Lilly, Wednesday morning, Caterpillar. And then after hours on Wednesday, we have Microsoft and Meta and Coinbase. Okay, real important earnings after hours. Alphabet, And then again, Microsoft and Meta, we've got the fantastic, I almost did it again. We've got the magnificent 7 stocks reporting this week. So Microsoft and Meta after the bell on Wednesday, Alphabet after the bell on Tuesday, along with AMD and Snap. And then we have Amazon and Apple after the bell on Thursday, along with Intel. Again, I still think there's a strong possibility that the divergence develops on the S&P 500, that we go to a new all-time high and see divergences develop with the awesome oscillator. I will show you that. I continue to believe that, again, we're in a topping process, but I don't think it's done. And I'll show you what I'm looking at. Now, in addition to earnings this week, and again, we got big tech earnings this week, so we'll be watching the NASDAQ. Earnings for the Dow, for some Dow components. We have S&P 500 stocks reporting, so a lot of stuff going on. This week we're going to get GDP before the market opens on Wednesday, October 30th. We're going to be closing out the month on Thursday, but we are going to get that GDP. It's expected to come in at 3.1%, just above the 3.0% previously. Eventually, we will see this number come in negative, but this will be quarter 3. Thursday, we're going to be getting the Fed's favorite gauge of inflation, the PCE data. Over month, it's expected to come in at 0.2%. The core is 0.3%. And then we're expected to see the year-over-year headline number drop 2.1%, opposed to the previous reading of 2.2. And the core is supposed to also drop 2.6 from 2.7. So those are expectations that it's expected to come in a little bit lower with the headline and the core number. And then on Friday, we're going to get the jobs report. And the jobs report is supposed to come in at 110,000. This will be the last jobs report right before the election. We know we had that blowout jobs report, and we're being told, oh, the Fed now made a mistake based on again, fake numbers. Even if they're not revised down immediately, eventually they will be, in all likelihood, as we've seen. The Labor Department has overstated the amount of job creation over and over again over the last year and a half. So again, this is 254,000. The unemployment rate back at 4.1%. We'll be watching the jobs report. 110,000. If this starts weakening, that could cause concerns about the economy. Eventually, again, we will see this number go negative. And again, we have recession indicators that are predicting that we're going to get a recession. That will likely show up in the next 3 to 6 months or so. That's usually how long it takes. Following week, we'll get the election, and then we'll also get Fed Chair, we'll get the FOMC statement and rate decision, and we'll get the Fed Chair Powell's press conference, and that'll be on Thursday the 7th. Again, now here's what happened today. The market gapped higher, futures rose, and we ended up gapping higher at the open as oil collapsed. It had dropped over 6% at the lows. It rebounded a little bit off of those lows, and the market had a relief rally, and oil tanking helped the market. Ultimately, though, oil dropping lower is a sign that recession is coming, so do keep that in mind. That's a huge red flag. And I'll try to bring up the oil chart in just a second here. But we gapped higher, and then we drifted lower, tried to rebound, and then drifted lower. And we closed near the lows of the session here in the 5-minute time frame. We have the gap down over here. So again, we'll be watching. Do we go back and fill that gap? But again, I think I'm watching two scenarios right now. Do we backtest the broken trend line of the rising wedge, or do we get a rally and form a divergence? And I've talked about this at great length and detail. My guess is we're going to get the divergence, as I've said. But this is what happened today. And now this is what drove the market higher. We saw oil collapse, and we saw a milder response from Israel to Iran to try to de-escalate the situation. That's what happened the last time they got into it, with Iran shooting missiles at Israel. I think it was April there, and Israel de-escalated the situation back then, just hitting one target. Here they hit 20, but still they could have done a whole lot more damage, and they didn't hit the oil facilities. That's why we're seeing crude oil down. And we got a relief rally initially. Wall Street hoping that geopolitical issue is behind us, although we're not sure of that. We have to wait and see if Iran responds. But like I said, some news outlets are saying they're not going to. The Iranian president saying they should. We'll see what happens. Again, that's a geopolitical issue. You just never know with those things. And again, maybe it is over. We'll see what happens. And again, is the market just now going to focus on other things, economic data, the Fed, the election, and earnings? So we'll see what happens. But again, this is what created the rally today, a relief rally. And oil ended up down over 5%. It was down over 6% at the lows of the session. This is the crude oil futures daily chart. But as we saw crude oil drop, and that helped the market get a relief rally, and hopes that we've seen de-escalation of the situation, we saw the market rebound, but then we saw the 10-year yield pop higher. And again, we're back up at this area where we saw the NASDAQ peak back in July. If we see the yield come back down, it might help the market for the short term and still get that divergence on the awesome oscillator that I've been talking about in the daily time frame. Watch the video all the way through and you'll see that. The rising wedges, what I'm looking at, stuff. Here is what happened today. We had the Dow up 0.65%. It was up 273 points. It's up at higher levels at the highs of the session, but we got a bullish inside day today on the Dow. So I think that that could give us a rebound. I talked about how the Dow took a hit last week, and I told you if the Dow rebounds, we could see the S&P and the NASDAQ get those divergences going on with the awesome oscillator. And then we'll see if the Dow does it too, or if we get a lower high with the Dow. But the Dow rising 0.65% today. We have the S&P 500 rising by 15.5 points, up just over 1/4%. We have the NASDAQ up right around just over 1/4% as well. And then we have the Russell, the best performer of the day, up 1.63%. Russell was really struggling last week, along with the Dow. The VIX was down by 2.61%, still hovering above 18 at 19.80. Again, we continue to hold between the 18 and 20 level. And again, with the 50 period moving average above the 200, there's real risk for the stock market. And again, I'll try to work in that VIX chart. Now, again, I'm watching the rising wedge patterns here on the S&P 500. This one excludes the shadow over here at the 100 period moving average. If we see a break of the 20 period, the blue line right here, then we can have a successful back test if we start selling off. If the S&P cannot make new highs but makes a lower high and we start rolling over here, and rather than forming a divergence, another reference point of a divergence like we got over here, we got multiple points of divergence. Then again, if we see the sell-off, we see the back test, that's a bearish scenario that we've seen a peak over here, and now we're going to get some volatility. We're going to sell off after getting a successful back test. But I told you, again, my signals are still bullish. Okay? Are you listening to what I'm saying? My signals are still bullish. Momentum tried to flip, and I'll show you the momentum indicators, what's going on shortly. They weren't able to change the trending signal, so I'm watching. Do we have a successful back test that does that? Here we got a black candlestick. We didn't close at the highs, and we're still in back test mode right here. We did not move above Friday's highs. So we'll be watching. Do we get above the trend line? Do we get above Friday's highs? Do we form the divergence on the awesome oscillator? Maybe a triple divergence on some other indicators like momentum here and the RSI. This is the back test scenario. Here I have the scenario that we've included the shadow and that we haven't broken down yet, and that we bounce off the 20, that we bounce here surrounding the trend line, and we go back up here and we end up forming a divergence in the upper end on some of the indicators, or triple divergence like right here. The MACD really, it had almost two equal peaks with this pullback right here to the 20 period moving average. do we get a divergence that forms right here, that would be moving us above this level. Again, my target for the S&P is 5750 to 6,000. Where am I getting that from? The monthly chart. Those are the trend lines. We've already hit the minimum objective target. We hit the high 5,800 area. Okay, moving above 5750. We could move towards 6,000. If we do, again, the upper boundary is just under 6,000 in the high 5,900 area. We can go up towards it or even hit 6,000, overthrow the trend line. Dow just overthrew it slightly and reversed hard last week, dropping over 1,100 points, dropping 2.68% for the week. So again, you can get an overthrow or you can go up to that level, but that's my target level between 5,750 and 6,000. Again, I'm looking for a topping process. I told you, again, we were going to move to new highs. I predicted the sell-off for July. Predicted we'd eventually go back up and rebound to a new high. We didn't do it here in August. Predicted the sell-off there because the signals said we were going to get a sell-off, but predicted the bottom over here and said, hey, we're going to go and still make that new all-time high. And then we predicted that the triangle would have an upward resolution at key support, which it did. And again, I'm looking for the top now. And why did I predict that triangle would still go higher? Because NASDAQ hadn't filled the gap yet. I've been saying it over and over. NASDAQ needs to fill the gap at 20,400. We've now seen that happen. So again, I'm looking for a top. Is this it? Or do we get one more push higher and then turn? But I am looking for a top. You have a very reliable reversal pattern. And again, it may have broken down already if we start seeing the back test scenario begin to play out. So we're watching how this unfolds. But if we do go higher, again, you can get a triple divergence here. This little divergence gave us a sell-off back to the 20 and the cloud here. If we get a divergence on the awesome oscillator, you see green bars this week with earnings, and then again, eventually that rally being sold. It could be sold this week or it could be sold next week with the election if it forms. Again, I told you, I think it still has a very good shot at forming, because I have the guts to tell you what I think. And again, make it clear, I've been predicting new all-time highs. I still think you've got a shot of making another round of new all-time highs before all is said and done in an overall topping process. I'm not looking for a crash. I'm looking for a top. Over here, again, when we were selling off, eventually we're going to go make new all-time highs. If you hear me say the market's going to crash, you're not listening to what I'm saying. The market's going to make new all-time highs, top out, reverse, likely usher in a bear market that will usher in a crash. The market has done exactly what my indicators said it would do, and that's make new all-time highs and go back and fill the gap at 20,400 on NASDAQ. Now we're at levels of complacency, as I talked about. Again, the bears have thrown in the towel because looking for new all-time highs. A majority of the bears didn't think that would happen. Again, my signals remain bullish. But the bulls, they're completely complacent. They don't think there's any risk right here. So let's take a look. Now that I've shown you both of these rising wedges, again, let me show you the S&P 500 awesome oscillator. The awesome oscillator, I think, will make a divergence right here. It went slightly higher, almost two equal peaks, but slightly higher. NASDAQ clearly higher, but again, I think you're going to see green bars this week. You could see it show up by tomorrow. I'm predicting that we might get a divergence. I told you I thought that was likely going to be the case right here with the awesome oscillator. I've talked about it in every single video. We've had the red bars. They could just go negative if we start seeing the back test scenario play out. But if we see the other trend line act as a support level, we can still get another push higher, have a sideways move, get another push higher, and form a divergence on the awesome oscillator. And that could set up this week. It could set up this week and finish this week. That's certainly possible. Or it could finish into the election or with the Fed, but it's something worth paying attention to. I've continued to talk about this over and over. I still think it's going to play out. I've been predicting that it happens. I think it will. I think we'll see the S&P move to a new high, and I think we'll get the green bars here. So that's what I think. If I'm wrong, we take out the 20 period. We got to see the trending signals turn bearish. an important thing is happening. As I think this divergence is setting up, I think the divergence is completing and putting the final touches on the weekly chart. I think that divergence is coming to a conclusion, and we could have evidence of that this week. Again, if we tick up, we can complete a divergence in the daily time frame, and if it starts to play out, we can start seeing the volatility in the weekly time frame. See some of that last week with breaking the winning streak on the Dow and the S&P 500, but not enough to clearly have enough evidence that a reversal has begun. My guess is it has not. My guess is we're going to form the divergence as I've been predicting on the Awesome Oscillator, and I think tomorrow you're going to see a green bar here show up in all likelihood tomorrow or the following day. In the next 2 days, I think you're going to see it here surrounding earnings. And then I think the stochastic will turn back up, and again, MACD could form another reference point of a divergence there, or at least attempt to. As I think this Awesome Oscillator is setting up a divergence, look at what's going on in the weekly chart. I warned you about this. I warned you it was coming. We got a red bar. Now, the red bar, we may get it, and we may set up a top. It may go away before the week ends. That's possible. But it could be warning, hey, we're getting ready to have a turn. Now, maybe the bar turns green by the end of the week. We have a lot of earnings. Maybe it remains red and we still rally to new highs. That happens sometimes. Other times you get the red bar and you start selling off. So it could turn back to green. Or again, if it does turn back to green, we could get the red bar the following week. It could be starting to warn, hey, momentum is starting to wane here in the weekly time frame, and our divergence, whoops, wrong one, our triple divergence is nearly done. We had this divergence give us this sell-off. So again, I'll be watching. Even if we get a rally, do we still get a final print with a red bar? Do we have the green bar go away with the rally, but then start to sell off maybe Thursday or Friday, and it shows back up? So we'll be watching to see how it unfolds. Do we get a big rally to start the week off, but then do we end in weakness, or do we close strong and maybe it goes away and maybe it shows up next week? We have the election. We've got the Fed next week. So again, a lot of stuff coming down the pike. But this is a huge, huge warning sign. Now, again, the signals are still bullish, okay? But this is warning, hey, a turn is likely getting ready to happen. Doesn't mean the signal has been triggered yet. That's why I keep saying my signals remain bullish there in the daily time frame as these negative divergences set up. And you can see the same negative divergence there on the MACD. We're now seeing the stochastic start to roll over here. So again, momentum could be getting ready to flip to bearish in the weekly time frame. S&P weekly chart here. Dow's doing the same thing in the weekly time frame. The Dow has that divergence going on on the MACD here as well. We got a bullish inside day on the daily chart. We had that red bar, and then gap higher. We got a bullish inside day, a bullish Harami pattern. We'll see if we go back up and get a counter trend for a lower high or try to get a higher high. The Dow may set up a lower high while the S&P makes a higher high. Look at this right here. If we start seeing green bars show up, again, you could get a recovery, or you can with a lower high or a divergence on the Dow. So just some things to be paying attention to. If it goes negative, then that would be a sign of weakness. Well, the S&P did not flip the cloud back to green today. Again, we're kind of going in this trading range. We did see it on the NASDAQ. We attempted to do it on Friday in the NASDAQ and it failed, but we did do it today, getting a relief rally, oil dropping. S&P could get it tomorrow, possibly, or the day after. I told you over the weekend, NASDAQ attempted to do it on Friday, but the rally was sold. So we got the gravestone doji. The candlestick means nothing unless it is confirmed and gets a follow-through. I talked about over the weekend that, again, get a relief rally. I talked about how Bitcoin did not react because, again, trades around the clock. Again, it looks like Israel's trying to de-escalate the situation, and the market's like that. We got a relief rally. Oil collapsed. So again, we're getting the stochastic turning back above the signal line here. S&P and the Dow do not have that yet, we're likely going to see that tomorrow or the following day. I think we'll get green bars here on the awesome oscillator, and again, a bullish reversal of conditions. Now, let me just bring this up here just with the awesome oscillator. Again, you can see what I'm looking for. I'm looking for green bars. We got the bullish reversal of conditions today. We didn't move above Friday's high. My guess is that, again, we're going to complete a rising wedge. I'll show you that in just a moment. My guess is we're not going to move above this level. I told you I could be wrong about that. Directly above the high right here is the trend line again. I believe that we have a top over there because we had slammed into all the trend lines in the monthly and the weekly charts that I talked about back in July. So again, I'm watching to see what happens. But I think we'll see green bars probably tomorrow, maybe the following day. But S&P could join. And the Dow, they could join NASDAQ and get a bullish reversal of conditions in the daily time frame. We're back above the 10, back above the upper boundary of the cloud, closing above it. See the little blue arrow? That's flipping the cloud. See the little blue bar? That's all bullish. Been predicting this divergence would likely form, and again, I still think it's going to. We already did move slightly higher on NASDAQ, but I think you're going to see green bars here, as I've been saying in every single video. I think that's what's likely going to happen. And I think that will likely push S&P to a new all-time high, and I think we're going to carve out this rising wedge on NASDAQ. No confirmation on the gravestone doji. Again, it's meaningless unless it is confirmed and gets a follow-through. NASDAQ didn't get the red bar here in the weekly time frame. It had showed up briefly, but then went away. And again, this is the weekly chart, so we'll see what it looks like by the end of the week. But again, it could close green. We'll see what happens. NASDAQ 100 futures still has a red bar, so we'll see what happens. It showed up right at the open of futures, and it did not go away. It remained there, and got those dojis previously in the weekly time frame. We'll be watching to see what the close looks like by the end of the week. I think that divergence will form with the green awesome oscillator here in the daily time frame, and then I think we will see that oops, that was futures. Let me just put back on NASDAQ cash. I think that we will get the green bars, a few days of green bars, and I think that will form this divergence. Maybe it lasts all week and we sell off next week with the election or with the Fed. We didn't get a sell-off ahead of the election. We can get a post-election sell-off. Certainly possible, but again, signals back to bullish. S&P likely to turn back to bullish. Awesome oscillator divergence is likely to set up. Now we're seeing momentum flip back to bullish here. Now NASDAQ had a rally. We had a triple-digit rally, and we gave it all back, and we closed flat on NASDAQ. NASDAQ ended down less than 1 point. We had a gravestone doji. Again, we could still hang around this area if we don't start to turn a lose the 10 and 20 period moving average. Could still get another reference point of a divergence here on the MACD. Be watching to see if the high from July here, the July 10th high, if it continues to hold or if we try to push above it. NASDAQ Composite did push above that high. It's all inclusive, whereas the NASDAQ 100 has a limited amount of stocks on it. So we'll be watching to see what happens here with earnings this week. I've talked about the upper Bollinger Band. Do we close above it? Do we try to push above it? Do we try to push above this peak right here this week with earnings or not? And again, we'll be watching to see what happens. I do believe a double top is forming. Whether that is with a lower high or a higher high remains to be seen. But again, I do think a double top is forming. I told you with momentum, I thought a divergence could develop right here in the most recent price action with this peak over here. And again, form a larger triple divergence. I still think that's possible. But again, we're still possibly back testing the trend line here, just like the S&P. If we start breaking down, then that would give credibility to a breakdown and back test. If we, can close back above that level, which we did not, then again we could dance around here and still get your rising wedge, but just a little bit bigger, as I've talked about. So again, we'll see, do we get a triple divergence or and if we do see one form here, we can get the divergence on the awesome oscillator. We still have a divergence in that we went higher than the previous peak over here. But again, I'm talking about green awesome oscillator bars. I'm talking about clearly a push higher to form triple divergences on some indicators. And again, we've got a triple divergence here. We have a divergence that we went higher with the RSI. Again, S&P try to push higher, NASDAQ's not done here. I have both trend lines marked here, the red rising wedge back testing, and then the larger one. And again, our gap fill, we predicted after we were selling off when we gapped down. I've been predicting we come up and fill this gap and form a topping process. Here we are. Okay, now it's time to be watching for a topping process. And again, if I'm wrong about this high holding over here at 20,691, then again, we could go up and hit the upper channel line on the monthly and the weekly chart. So currently, NASDAQ's at 20,351. Again, we could, I think the S&P will push up to another new all-time high in all likelihood. The S&P has to join NASDAQ with the bullish reversal of conditions here intraday. Seeing momentum turn back to bullish, the trend is still bearish. We'll be watching what happens with the S&P 500. Same thing here with the S&P 500. Got to see the trend change. We are seeing the momentum try to flip, but we've got to see the trend change here. Is this a successful back test that's about to happen, or can we flip it back and get the diversions and again have that other larger rising wedge, get the balance of power going positive if the rally is going to resume? So we'll be watching how earnings impacts the NASDAQ and S&P. Now here, again, same thing. Momentum is trying to turn bullish. The trend is still bearish. Can we turn it around and form a divergence and go higher? Or again, do we have a successful back test on the S&P daily? Got to turn the trend signals back to bullish. Here intraday, and then here in the daily time frame, the momentum line's got to turn back to bullish. And again, we got to get momentum oscillator here back into positive territory if we're going to go higher. If we have a successful back test, then we've got to see the trend signals begin to break down. Now we saw the bullish reversal of conditions with momentum on NASDAQ today, and here the momentum line turned back to bullish. We've got, on Friday, we had the arrow showing back up with momentum there, and now we're getting a green bar. So again, momentum flipping back up here, firming up at the center line. So again, can we see a divergence? My guess is we're going to see it on the awesome oscillator. And then I think that'll allow the weekly charts to play out.